I think we can start. Good afternoon, everyone. I'm Mansi Vora. I'm part of the PwC Fintech team and also manage the Uday program for Mumbai Fintech Hub and Government of Maharashtra. We work with Maha IT on this student education platform for fintech for Maharashtra. This is the 31st edition of the Uday Knowledge Session. And just so that for those who are new and attending first time, Mumbai Fintech Hub is a fintech vertical of Government of Maharashtra. It is focused on the growth of fintech sector in the state and has a key focus on building talent through education, fintech talent specifically. Uday is of Mumbai Fintech Hub. It is their flagship education program, and it focuses on assisting students who are interested in pursuing a career in fintech. And we try to do different courses online. We upload content. We have been conducting these knowledge sessions. All this is in aid of helping students, giving them the knowledge about this sector. And we have our own network of colleges that we have on the platform. We have about 16 colleges now on the platform in Maharashtra colleges who we work with their students who are part of our group, and we extend different content to them, invite them for sessions, etc. We also have fintech experts like Vijay, who's here today, who we invite to give us knowledge on the different fintech models that are out here to educate our students. So today we are very excited to have Vijay because he's going to talk about how banking as a service and embedded finance will revolutionize fintech, which is a very interesting, a lot of buzz, obviously given the pandemic, about how fintechs are going to change the way we do, basic transactions or everyday banking services, and we all have seen this firsthand. So it's going to be very interesting to see this. Vijay is a fintech industry veteran. He has 15 years of experience here. His expertise is across payment, credit, neo-banking, and he has headed the fintech verticals at PayPal, Zeta, and Kescorp. He's from IMA and a BITS Pilani graduate. He also mentors fintech startups through accelerators at IMA, ISB, and Let's Venture, and is the faculty at BITS Pilani for their Global Executive MBA program. So we are really excited, Vijay, for you to take the session and walk us through this. So handing it over to you, and welcome for the session.
Thank you, Mansi. Thank you, Prateek. Yeah, happy to start. And Prateek, would you be giving me the ability to enable content?
Prateek? Prateek, can we give sharing rights to Vijay?
Yeah, sorry, done.
Okay.
All right. Yeah. Just give me a second.
As Vijay is just pulling up his screen, just a quick note for everyone. We want to keep this session interactive. And if any of you have any questions, if you look on the right side where the messages and the participant listed, there's a Q&A. So please do send us your questions while Vijay is presenting. And, as and when Pratik and me can come in, we will ask him those questions. So we can, he can address them as and when we think it's appropriate for him to bring in. But do put in your questions and keep it interactive. Otherwise, we'll keep all the attendees mute. So that we can have a smoother session. Thank you.
So just a quick check. Are you able to see the presentation in slideshow mode?
Yes, we can.
Okay, excellent. Right. So just a second. So the way we will do this, right, and for the benefit of everyone, that I'll obviously walk you through this topic, which actually is quite fascinating. And really looking forward to a good discussion over the next a good portion of an hour. What I think we could do is, as I'm walking through this, etc., I think towards the end, I can dedicate time for Q&A. So I'll, from a time standpoint, I will look to wrap this up, say, by another half an hour or so, say 4:40 or thereabouts, when I will kind of walk you through this and give you all the complete picture of both banking as a service and embedded finance. And at 4:40 we can pause. Happy to for the first 10 minutes or so. After that, I can take questions on this topic, and then for the last 10 minutes, I can take topics which are questions on topics which are more general, right? Like so, if you have questions around fintech, careers in fintech, etc., happy to take them, right? So that sounds good, Pratik and Mansi.
That's perfect. That works.
Awesome. Good, right? So just a little more detailed background about myself. So did my engineering from Pilani and did my MBA from IMA and also a CFA charter holder. More than 16 years at PayPal, Zeta, Tata Strategic Management Group, Westcorp and Zoll. I've headed roles in strategy, business development and operations. Part of the founding leadership team of Fintechs startup Zeta. We exited to Sodexo as a strategic partner. Been a successful investor as well, with part of $700 million fund. Been a director on the board of 5 companies. And like Mansi mentioned, I'm also a fintech mentor to multiple incubators and part of the faculty at which Pilani's Global Executive MBA program for fintech. Right. So what will we cover today? Right. And what we will begin doing, is I'll begin setting the context for banking as a service and embedded finance and all of that. We will understand what it is and why do we really need it. Right? I'll give you some examples. What is embedded finance and what are some of the use cases in different industries? What's API banking and why does it act as an enabler? Literally, like the next is literally one of the most important questions that's being asked about, right? Saying that how can literally every company become a fintech company, right? And that's in some sense what the prognosis is over the next 10 years is that every company in the world will become a fintech company, right? And we'll again look at examples of different BaaS firms, embedded finance firms, and through the course of this, I really want you all to get a good understanding of what is banking as a service. Why is it important, right? I mean, you keep hearing multiple terms like neobanks, different kinds of fintechs like lending fintechs, wealth techs, insurtechs, etc. Really, banking as a service is what is going to enable a lot of that to happen. And literally, right, if you look at the future, banking as a service is going to enable fintech for all companies. Okay, and which is why it is super important to understand it. It's a fascinating topic, and we'll be looking at a lot of examples and so on. So, and my desire is that each of you has at least 3 takeaways from this session, if not more. But I now really like you to have 3 takeaways. And if you have done that, and if you have learned something new as a part of this, I would have considered the session to have been fruitful. Okay, so let's dive in. So, what is the overall context, right? So, we're having this world, right, essentially where digital technologies have really transformed business. Okay, so and all of us can see that like real time. I mean, you see the proliferation of mobile devices. You see cloud computing, really, ruling the roost. You see digital architecture, right? So, where gone are the days, where you had legacy systems, non-real-time kind of processing, where you had physical data servers, etc. All those are gone. You have systems today which are real-time, which are super efficient in terms of processing, which have data sitting on the cloud, where you can scale as you grow. Right? You can literally have infinite storage and processing capacity, and all available to us from the cloud. What that has done is made businesses be more nimble, right? Be more responsive to customer needs. Okay, and all of this has happened because of the last point, which is APIs. Right? So APIs, which are application programming interfaces, enable the exchange of data. Okay, so what are APIs? APIs are nothing but it's like a set of rules how 2 systems talk to each other. Right? So if 2 humans talk to each other, we need a common language, right? Or at least you need, if not a common language, you need a translation so that the communication is intact. APIs is the system way of communicating. It's how systems communicate to each other, and they are able to take instructions, execute them, etc. Okay? So why am I saying all this? So this is the world in which we live in today. Okay, so the world which is living, which is fast changing, which has a proliferation of different types of technologies, and it's made businesses, be more nimble, adapt to customer needs, and really scale fast. Okay, so and in this, right? I mean, like, how has banking changed as we have seen it, right? Like, so earlier, we had a very traditional way of banking where customer or the consumer will talk to the bank will talk to the merchant, the corporate will talk to the bank, and the supplier, right? Will talk to the bank for each of them for different kinds of facilities, right? The consumer might want to keep a deposit or take credit. Merchant would want credit from the bank. Similarly, corporates would want loans, would want to park their money in terms of treasuries, etc. And the supplier, would in turn seek credit from the bank, for him to run his business. What open banking has enabled, right? And to briefly touch upon open banking is a way by which banks have opened up their systems. So imagine, like, in the past, banks being like black holes, right? In the sense, nobody really knew what was happening inside. They had their own systems, etc. But over a period of time, they have opened up their systems, which is really the term why it's called open banking, which means that today, anybody can access the bank to a certain degree. Obviously, not to the entire degree. It's an evolving journey, and certain geographies have taken a greater leap in terms of how open banking has evolved. For example, open banking has taken the highest leap in UK, right? Where the PSD1 and PSD2, the EU directives, have really enabled open banking to become much bigger. Okay, so but why are we seeing this? So I'm setting the context to tell you why BAS is important. Okay, so I'm going to use BAS, as a short form instead of saying banking as a service all the time. So BAS is important because these things are happening in the world today as we see it. Okay, what was the legacy banking model? So if you see license holders, obviously all banks hold the licenses, right? So they have the licenses, and they use the licenses to build profitability, which means they lend more, which means that as they lend, their profits grow. It allows them to scale operations and marketing, which attracts more deposits into them, right? And obviously, the license allows them to take deposits and keep it. It becomes a good flywheel because as you take more deposits, you're also able to lend more. And as you're able to lend more, you're more profitable. As you're more profitable, you're able to scale more in terms of marketing and operations, which means you're able to get more customers. More customers will mean more deposits. So it's a beautiful flywheel effect, which each part of the flywheel reinforcing the other. Okay? But this is the model which has been there probably for the last few centuries in terms of banking. How have things been changing as we see it, right? So how have things been changing is that newer models, right, really focus on the customer experience. So historically, right, what banks would do, and a lot of you would be familiar with that, right? Like, so your experience with banks is very transactional, right? Or if you deal with a bank, the bank would try to cross sell you other products, etc. Not really worry about what's your experience, what is it that your unique requirement is, and so on. But those days are changing, right? And they are changing really fast. And why is that happening? Because digital brands are able to build world-class experiences. Okay? Today, each of us as customers want the customer service experience of an Amazon, right? Or the ride experience of an Uber, okay? Or the delivery experience of a Swiggy or a Zomato. Whenever we are also engaged with our financial services client, right? So which means that if I'm working with a bank, uh, 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 in the sense that I am engaged with the bank for the bank to offer its products to me as a customer, I want that level of customer experience. Right? I do not want to wait for information. I do not want to. I do not want to. See that my expectations are not being met. Right. So user experience becomes super important, and digital brands are able to deliver that. What that does is when I have a world class user experience, I also refer people whom I know, my friends, my family, right? Saying that, hey, this is a great brand. Why don't you try it? And that causes referrals. Referrals automatically brings in customers, right? As they say, right? Referrals is the best customer acquisition channel that any brand can have, right? And it also equally applies to digital brands and to financial services companies. Okay, so with that, what happens? The user base grows exponentially. Right? So naturally, right? I have a great experience. I have referred multiple people to the brand. They also get the same experience, and the user base grows tremendously. Right? So, which is also a beautiful flywheel effect. Right? Now, why again we are bringing this? Because this is the need of the customer today. Okay? So, if any brand worth its salt wants to deliver financial services experience to its customers, it should deliver a world-class experience, right? And for it to deliver a world-class experience, existing technologies do not allow it to do that. Okay? Existing banking technologies are fairly archaic, they are fairly legacy based, they are monolithic systems, basically meaning that you cannot take individual parts and customize it. Like it's part of a monolith, right? But those needs are there from the customer standpoint. So what is the solution? Right? So if you were to think of it, customer wants Uber-like experience, but the bank, and even I'm talking even of the top class private sector banks, their systems are 10 years, 20 years, 30 years old. And it's not a fault of theirs, right? So when banking started evolving and so on, they did the first embracing of technology probably in the 90s, right? And so they embedded systems, and then those systems scaled as their user base grew, right? But their systems have limitations because they are built on technologies which are far outdated, right? So you need a change. So who is going to bring about the change? Right? And how do we make that happen? That's exactly where banking as a service comes in, right? So far, I was setting the context. If you think about it, I was telling you, that it's a digital world, fast changing world. The requirements of the consumer are fast changing. They are very high, and existing banks with their banking systems cannot meet the requirements. So you need a layer in between, which is called as banking as a service. Got it? So banking as a service nothing but it's a layer which offers complete banking processes, which could be payments, it could be credit, it could be deposits, through a modern API-driven layers. Okay? So it's through API-driven layers um, that is being offered. And what it does is, the third-party brands, they embed financial services in the context to create better end journeys for their customers. Okay? Which is why banking as a service and embedded finance are closely related. Okay? Embedded finance is nothing but the application of banking as a service. Okay, so if you see the diagram, it will become very evident. You have the user on one side, you have the digital platform, right? And the digital platform wants to offer its users financial services, but it does not want to do so in the same archaic, age-old way by which banks operate. And financial institutions cannot talk to this end user directly because the end user is owned by the digital platform. So you have this layer in between called embedded finance infrastructure or banking as a service, which really makes the whole thing work. Got it? Right? So that is really banking as a service, explained in a nice, crisp fashion. How does it go? How does the whole thing work, right? So in any banking as a same service framework, you have three layers. You have brands, right, which want to embed financial services. Let's say today you are a Swiggy or a Zomato or even Ola for that matter. To your riders or to your customers, you want to offer them financial products, right? You want to offer them credit cards, you want to offer them deposit accounts. So for example, an Uber rider, he gets his earnings through Uber. If Uber allows him a way to keep the money with in a financial institution through Uber, the driver will happily take it. And that is nothing but embedding finance into an existing product, right? So you already have an existing distribution and an existing product, and you want to embed the financial product into it, which is why banking as a service, which is where banking as a service comes in. Okay, so you have three guys, right? So you have, let's say in the same example, you have Uber, which is nothing but the brand that's mentioned here. Then you have the provider, which is the banking as a service player, right? Who kind of brings all the functionalities to make it happen. And you have the license holders, which is nothing but the banks, right? ultimately have the license to provide the product to the end user of the brand. Okay, so there are always three players in any banking as a service or an embedded finance structure, right? And if you see the picture on the right, you will see which are all the capabilities that the provider offers. Okay, so the banking as a service provider literally has to do a bunch of things for this whole thing to work, right? Including operations, to treasury, to compliance, all of that stuff. Okay, so for you to visualize mentally, think of it like, let's say you are a Swiggy customer. You want the ability where like you on the Swiggy platform, you click and you either get a prepaid card or a debit card or a credit, etc. Right? And interestingly, if you might have seen in recent times, Swiggy actually has something called Swiggy Money, right? That's nothing but embedded finance. Right? Go out and check it out the next time you're ordering from Swiggy. That's nothing but embedded finance. So you have the Swiggy as a brand, and at the back end they work with a company called M2P or YAP, right? Which is nothing but the provider. YAP in turn works with a series of banks. Let's say the bank in that case could be IDFC First Bank. Right? So that's how three parties come together to make banking as a service really work. All right. So just so I gave a domestic example. This is an example of from the US where Mercury is the fintech, Synapse is the banking as a service player, and Evolve is the bank, right? Which is actually provides the underlying deposit accounts and has the licenses. So you will realize that in all these cases, working with the bank is super important because the bank has the license. Yeah, so the bank has a license. Give me a second. So the bank has a license where they in turn provide so the license is used by the banking as a service provider. The technology is built by the provider, and this combination is given to the fintech. In this case, fintech is Mercury, which in turn offers this to its customers. All right, so that is the way the whole thing comes together. Okay, the the beauty with banking as a service is through that, right? Designing, building, and running a finance business becomes better, faster, and cheaper. Right? I mean, I can go to market with a product really fast. I can go to market with a product which is not only better than the existing counterparts, but it's also cheaper for me to do that because I've gone through this banking as a service layer and not waited to work directly with the bank. Right? And this has happened time and again with all the leading neobanks that you see here. Right? So in this, you will see some of the leading neobanks. There are a couple of European neobanks and a couple of US neobanks. Monzo and Revolut are large players in Europe. They're also in the US. Chime is the largest US neobank, and Varo is a neobank which also has got a banking license. Okay, so the way they all started is they launched cards and they extended the product offering by working with a banking as a service partner, right? So let's say, they started with the retail banking, they went into SME banking. They started with travel cards, they went into prepaid cards. They started with banking accounts, and then they went into and then they went into credit. They started with bank accounts, and then they also added credit cards. How are they able to add such products, right? If you're going to wait till you build it on your own, that's going to take a lot of time, right? It's much smarter, faster, and easier to go through a banking as a service player, right? Which is what all these brands have done. Okay, and I think some of the names you would be familiar with, right? So it's Monzo, Revolut, or Chimavera. These are literally leading names, in those geographies, right? And if you if you aren't familiar with them, I suggest you should go and look them up. Like Revolut has close to 10 million customers who use their product. It's a neobank. They don't have any branches. The product is through an app. It's a brilliant product that they have. All right. So similarly, Monzo, etc. Okay, and how is all of that happening? It's happening through embedded finance, right? Which is why this topic is important, which is why this topic is super critical when you look at how the future of fintech is going to shape up. Okay, like I mentioned, embedded finance is the application of banking as a service, right? So if you look at it, the what it does is that kind of application allows you to give a customer 10x better experience. And it's much faster, easier, and cheaper to integrate, and it works with real-time data. Okay, so whether it is Starbucks, which brings a financial reward program to its customers, whether it's an insurance company selling devices to track health, etc. So you might think that, okay, what's the correlation between an insurance company and a health device? There is a correlation, right? Like, so health insurance is really dependent on how healthy you are, and how healthy you are. One of the ways to track it is through the use of a Fitbit. And so real-time data flowing from a Fitbit allows the insurance company to charge lower premiums based on your activity levels. That is where the linkage comes in. All right. So, so if you see, there are multiple, and Uber is as an example, I had already mentioned. But all these are cases where different brands want to embed financial offerings into their core products. Okay. Is there other use cases of embedded finance? You have banks which want to bundle insurance services. You have retailers, which want to do consumer finance or do loyalty schemes. You have insurers, which want to give debit or credit services. Healthcare, healthcare units which want to offer insurance. Manufacturers, who want to do supply chain finance and consumer finance. And online, right? Revenues coming from producer or consumer finance. Okay, these are classic use cases of embedded finance. Okay, essentially what is happening is you have a core brand which where they are strong in one offering, right? And they want to give to their customers other offerings in the financial services space, either offerings that they don't have at all, or offerings which are related to their current offerings. Okay, so think about it. Like, you walk into a retail store, the retail store gives you a loyalty program. The loyalty program is not necessarily managed by the retailer or run by the retailer. It's run by a third party, but the retailer has embedded that offering into his proposition. Okay, that is where the concept of embedded finance comes in. Okay, yeah. So if you're a manufacturer, let's say you're a large manufacturer, right, and there is a small supplier who wants to sell to you, the manufacturer offers the supplier credit, but the manufacturer does not by himself offer it credit. He has partners who offer the supplier the credit. Okay, all this is happening because of this concept called API banking. Right? API banking is nothing but banking broken down through APIs, which allow different systems to talk to the banks, have real-time engagement with the banking systems, pull out information, and enable the whole process to work seamlessly. Okay, so it's nothing but banks which grant secured access to their financial services, helping companies build the products around the banking services. Okay, so that's exactly why API banking has been the core to enabling banking as a service and embedded finance. Right? So think about it like that. So banking as a service as a concept, embedded finance is the application. All this happens because APIs talk to the banks. As I told you at the beginning, to refresh your understanding, APIs are nothing but a set of protocols how different systems talk to each other. Right? So to talk to a bank, you need to talk to it in a way where the systems understand. Right? That's why you can retrieve data. The data can be, let's say, a user's deposits. Data can be user's transaction history. Data can be related to the user's credit. And when you think of user, please do not think only of an individual user. It's also a corporate user, right? This is why API banking is a key enabler, right, for really making embedded finance and banking as a service happen. Okay, here, there is one example, which is given in terms of where the bank is HDFC Bank and the third party is Razorpay. What happens is that Razorpay, as you know, is a large payment gateway, right? So HDFC Bank allows Razorpay to access its banking services. So if you think about it, right, where do you use it real time? Today, if you open any UPI app, whether it's Google Pay, Phone Pay, etc., how are you able to retrieve your bank balances real time? That's because there is a system which is talking to the banking systems, right? Right, and that is happening only through API banking. Okay, so this is the example also illustrates the same thing, right? Where Razorpay accesses HDFC Bank systems and gives the information to the end users. Okay, so I think this is one of the best questions that has been asked, saying that over the next 5 years, 10 years, etc., how can every company be a fintech company? Right? Think about it. Like, how can every company be a fintech company? And companies want to be that, right? So let us look at different sets of companies and see how they are actually becoming a fintech company or working with banking as a service companies to be a fintech company, right? Which is why this understanding is important. So I'm giving you examples, of leading companies across the world, right? And the way I have segmented is to say that there are traditional companies and then there are digital companies. Okay. And then there are non-finance companies and then there are finance companies, right? So if you kind of break down this quadrant, obviously non-finance companies have nothing to do with financial services. Finance companies have everything to do with financial services. Traditional companies, which means that they are more brick and mortar, offline, etc. Digital companies, obviously by the term, they are digital. Okay, we will look at each quadrant, and as we finish all the quadrants, you will develop a beautiful understanding in terms of saying, okay, yes, irrespective of where the company fits in, right? They have the ability to become a fintech company because of embedded finance. That is the understanding that I want you to take away from this session. Okay. And this, trust me, is a beautiful framework to look at it, because every company you look at, you can place them in one of these four quadrants and you will understand how they can offer financial services to their customers. Okay. So let's take the first quadrant, which is traditional companies, non-finance companies, right? Traditional companies, which means that they are non-digital, they are more offline, brick and mortar, large companies. Let's say a Walmart or a Reliance Retail, or so any of the car companies. You see some different examples there in terms of British Airways. You have telecom companies, etc., etc. What do they do? So they have a huge customer base, obviously, right? And they want to monetize that. They want to monetize that by offering those customers products. I think a lot of you would have been familiar with the Jet Airways loyalty program, which was running, right, called Jet Privilege. Right, it's got rebranded to Intermiles today, but that was one of India's first co-branded large programs where a non-finance traditional company wanted to offer its customers financial products, right? So they offered a credit card, a co-branded credit card, basically, and that was fairly popular. Okay, but why do they want to do that? They want to do that because they want to earn customer loyalty and generate new revenue streams. Okay, now let's move to digital non-finance brands. These are again non-finance companies, but they are digital. Your Amazons, Facebooks, Google, right? And all those companies, where WhatsApp, Instagram, all of them are digital companies, but they are not a financing company. They are not a financial services company, right? But they also want to offer financial services products to their customers, right? So you have, which is why you have WhatsApp Pay, you have Amazon Credit, you have Google Pay. Uber has kind of deposit taking facilities from its drivers, etc., etc. So how does this happen? Again, through banking as a service players and working with embedded finance players, right? So this happens through real-time APIs and pay as you go kind of pricing. Okay, so that is how the digital non-finance brands do it. Okay, so they already have a huge base. They want to monetize it more, but they don't want to build the whole financial services offering. They work with the BaaS player who has already built it. Okay, now moving moving gears a bit, you come to the digital finance brands, which are also fintechs, right? Now, fintechs, for them to take their product to the end user, they work with banking as a service players, because the banking as a service players makes go to market much faster, right? The banking as a service player allows the ability to integrate cleanly with the banks, build it on modular real-time APIs, you know, have literally top quality technology infrastructure while working with the banks, right? Because the banks player has done the grunt work in terms of working with the bank systems and ensuring that everything is kind of taken care of, right? So which is why whichever kind of wealth tech that you, whichever kind of fintech that you see, whether it is in wealth tech or whether it's in cards, whether it is in payments, right, whether it's in crypto, they all use some form of BaaS to go to market. Now, They can also go to market without BaaS. BaaS is not a must, but like I said, BaaS allows you to go to market faster, easier, and in a much more seamless fashion, right? That's why, that's why even fintechs use a lot of BaaS. Okay. Last quadrant is your traditional finance brands, your classic banks or NBFCs, insurance companies, and so on. They have their weight because of the license that they hold, right? They hold a lot of licenses. They look at BaaS providers to take their capabilities to the market, right? So they need to work with BaaS players so that they're able to go digital. They're able to work with a lot of fintechs because fintechs need the bank, right? Remember in the example I said there are three parts to the whole relationship. There is a fintech, there is a BaaS player, there is a bank. As much as the BaaS player needs the bank needs a BaaS player. Why? Because through the BaaS player, the fintech gets a lot more customers and banks want customers. Right? So it's a beautiful win-win for everybody in the whole chain. Okay. So as I said, the finance brands look at taking their products to market through the BaaS players. Okay, and they also work on modern API-driven platforms to attract non-finance digital brands as their customers. Okay, so all the traditional finance brands want to work with digital brands because they want their customer base. But today their systems are not developed for that, which is exactly where BaaS and embedded finance comes in. Okay, so to quickly run through the four quadrants again, we saw traditional non-finance brands, right? We saw digital non-finance brands. We saw digital finance brands, which are fintechs, right? And then we saw traditional finance brands, which are usually banks or NBFCs, insurance companies, the likes. Now, we saw how, irrespective of the quadrant you are in, for them to access a larger customer base, to offer their customer base financial products and to offer it much faster and cheaper, they have to work with the BaaS player, right? And that's what is increasingly happening across the globe, right? Which is why this whole topic is super important in the context of fintech. Okay. Now, what is happening across the world is you have large BaaS players, coming up, right? In the Americas, you have Marketa, Galileo, Bond, you have Hydrogen, all of them, really taking shape. In Europe, you have Rails Bank, Onpex, Griffin, Weaver, Solaris Bank, all of them big BaaS players. In Asia, you have players. I mean, a lot of them, you see are also Indian names like Yap and Zeta, Open, Setu, and so on. Africa, you have players called One Pipe. So these are entities which really have taken the whole BaaS offering and they have literally transformed the fintech landscape because of their offerings, right? I mean, several of them are multi-billion-dollar businesses. Some of them are listed, and they are literally driving the forefront of fintech revolution. Okay, so that is why I kind of gave some of the names so that some of them register in your mind and you're able to kind of look them up, understand them more, etc., etc. Okay, and what has happened in the whole Indian ecosystem is that a lot of the banks have started opening their APIs to fintechs. They've started opening the APIs to BaaS players because it's a win-win scenario, like I said, right? Like banks want the fintechs customers, but do not have the ability to go directly, nor they have the digital capability. Fintechs want the bank because fintechs want the bank's license, right? Without the license, you cannot operate. And fintechs cannot integrate directly with the banks given the whole way by which banks are set up in terms of their tech infrastructure. So you need a BaaS player in between. Okay. And this is how different banks like Kotak, Yes, HDFC Bank, and ICICI Bank have really opened up their APIs, put out sandboxes for a lot of developers and startups to test. Right. And they're also riding the journey in terms of the fintech evolution. Okay. So with that, I will kind of pause for Q&A. In essence, right, if you were to look at what we covered, we really understood the context behind BaaS, right? Why really do we even need BaaS? Right? What is the landscape today, and what is BaaS? Right, in terms of how as an intermediary layer, it works between the banks and the fintechs. Embedded finance being the application of BaaS, right? We saw some examples of how the three entities come together, and make BaaS happen. We saw some use cases of embedded finance across different industries, and then we saw beautifully how literally over the next 5 to 10 years, every company, irrespective of which industry, whether they are digital, non-digital, how they can be a fintech company, right? Where we saw different different groups of companies, and each of those groups we saw that how they work with a BaaS player to bring their fintech offerings to their customers, right? We looked at that. We saw some examples of BaaS companies across the world. We saw how Indian banks are working with fintechs, and that kind of forms a nice gist of understanding, right, in terms of the whole concept of embedded finance and BaaS and why it's so important, right? Which is why I kind of structured it like that and kind of gave you a very nice overview of what it all means, right? With that, I'm happy to take questions on embedded finance and BaaS. And I think once we're done with questions on that, then we can move to more general questions in terms of fintech, any questions in terms of careers, career choices, avenues to pursue, hot sectors, whatever you all have.
Yeah, so I think in the Q&A, Vijay, if there's anybody who has a question, you feel free to unmute yourself. I'll give it a couple minutes. If anybody is interested in asking a question, do unmute yourself. And Pratik, will they be able to unmute themselves?
No, Mansi, they can just post in their questions. I will have to unmute them if they want.
Okay, so if anybody wants to raise their hand, then Pratik can unmute you and then you can ask your question. Otherwise, we have what we did, we've also gathered questions before the session, which we have them here, so we can also use those. But I'm going to just wait if anybody has any questions before I ask the pre-questions up here. I think just going by the initial question that was asked, I think, of course, a lot of them were about career. But about embedded finance, I think one of them wanted to know the market size of the embedded finance and what is its potential.
The market size by various estimates across the world is close to $7 trillion. Right? That's because the size is that big because every company, for it to become a fintech company and for them to access millions of users, each of those users transacting in a few hundreds and thousands of dollars, the number literally becomes very big, right? Because at the end of the day, any commerce is driven by financial services, right? I mean, literally, every commercial activity is driven by has an underlying finance layer to it, which is why the embedded finance and BaaS market is so big. It's $7 trillion annually.
Okay. I hope whoever asked that answers that question. The other one was, will the neobank and fintech revolution take away the market share of banks, and what does the future of banking look like? I think future of banking you and I think have addressed, but will neobank and fintech take away the market share, which I also think
That's
you've
a
addressed, but yeah.
that's a good question. So think of it like you know the banks and the fintechs coming together to really expand the potentialities, right? So what it actually does is an increase in market rather than the same market share going from one person to the other. And I'm saying that for a few reasons. Okay? When fintechs come and work with banks, they are able to access customers who banks could never access directly, right? For various reasons, right? In terms of accessibility, in terms of the distribution capability, in terms of the customers themselves being willing to take those financial products, etc. But what the fintechs have been able to do is to expand inclusion, as we know it, to a larger base of customers. So so what you're doing is you're not splitting the pie, you're making the pie bigger. By making the pie bigger, there is enough and more for the bank, the neobank, which is nothing but the fintech, and the BaaS player, right? So that is how the market is changing, right? What's also happening is that, and this is not only for end customers, as in retail users, it's also for end corporates and SMEs, etc. because even the corporates and SMEs, they're finding that, okay, the requirements which they didn't think ever existed, now they're facing those requirements, and so they're now able to see that they can even avail of those requirements, right? So if they were going to informal channels like loan sharks, etc., no, they actually have access to formal credit. And I'll give you an example. So let's say you have a kirana wala who has been doing his business, and so far, for his working capital, he was going to a money lender down the road, etc. But now, there is, he has access to credit, and he has access to formal credit, because there is this fintech which has onboarded him, which tracks his transaction data. Using the data, it provides it to a finance player who's willing to look at it and underwrite it, right? So the migration to informal to formal is what makes the market bigger. Because the market is bigger, then you're able to share it between the different players, so everybody is a winner. All right. So the net answer to that question is that everybody benefits, and so there is not a trade-off between the banks and the neobanks.
Thanks, Vijay.
Yeah.
I don't know, Pratik, have you got any other questions? I don't see anything else. Unless I'm missing something.
Yeah, there are a couple of questions. Yeah, there are a couple of questions. So I'll just the latest question is from Shubhajit. How can embedded finance help startup as Make in India has given much emphasis on it?
Sorry, come again, Pratik. Can you repeat the question?
So how can embedded finance help startup uh, to build their products, as there is a lot of focus around Make in India from the government?
Right. Right. So, okay, I think there are two aspects to this question. One is, how startups can bring their products to market, which is where embedded finance comes in, and which was the quadrant that we saw in terms of how digital finance companies or fintechs can come to market faster because of working with BaaS companies. So that is how embedded finance is helping there. Second question, in terms of Make in India, has a strong tinge of manufacturing applicability to it, right? So, say if you're a manufacturing entity, or if you plan to set up a manufacturing entity, the thrust of the government is to encourage you to to set that up in India, so that the domestic economy booms, etc., etc. Right now, there wherever there is a financial services linkage, let's say you're setting up something in India and you need payment capabilities, you need payment processing capabilities, you need capabilities to access credit digitally. Those areas are where embedded finance can still come in, and where this startup, which is kind of trying to do something in that space, let's say in the manufacturing space, as a financial services layer, which is brought upon by the banking as a service company. That is how the second aspect gets addressed by embedded finance.
Got it. The next question is around how can neobanks get a banking license in future? If yes, how would it impact the traditional brick and mortar banking players?
Good question again. So, the example of that, which we have seen in the Southeast Asian markets, especially Singapore, is that there are specific licenses called digital bank licenses, which have started, coming along. So regulators have started giving licenses to people for digital banking, which means that those license holders can not operate branches, but they can acquire customers digitally, they can offer financial products digitally, etc. Now, that has happened in Singapore, and 6 entities have got the license. I would encourage you to read up about that. Now, similarly, digital banking licenses will happen in India. The time frame what people are foreseeing is at least 5 years away, right? Because if you look at how the regulatory scene in India has evolved, you had the traditional banking licenses, then you had new age banking licenses, then you had small finance banks, you had payments bank, etc. This is apart from the NBFC licenses and all of that, right? So there have already been a series of steps which have progressed in terms of how the banking landscape has been shaped up by the regulator. Okay, so for digital banking license to come, India needs to evolve some more, right? And that's what industry experts say that the regulators feel. Okay, and that will be at least 5 years away. And when that happens, there'll be a set of people who will bid for it, people will win it, and that will have its own set of rules and regulations in terms of how they will operate. But digital banks will coexist with the regular banks.
Awesome.
Got it.
Any more questions? Yeah. Pratik, any more questions?
Yeah, so we have next set of questions, couple of them around the career.
Yeah.
Person is asking how a working professional can switch his or her career into fintech field.
Yeah, so that's a good question. I am assuming that the person currently does not have a direct fintech background or is not working in the fintech or working in the allied fintech space. So the way to do it is to first get the right credentials, which means that one needs to show to the prospective employer that one is genuinely interested in that space, one has sufficient knowledge in that space, and while one doesn't have relevant expertise or experience, one has a promise to deliver. And you can show all that only if you have something to back it up, which means that either you have done relevant courses, you have done some kinds of certifications, you have, let's say, taken on some internships at financial services or fintech firms, and then shown your ability to work in that space. Again, fintech is a large term by itself, right? It breaks up into multiple segments. So you need to really see which segment interests you the most. Is it banking related? Is it wealth tech related? Which means, are you talking of stock trading, mutual funds, etc.? Are you talking of insure tech? Are you talking of payments? So there are multiple parts to fintech. Okay, so you need to see where your interest area lies, and then develop some background around that, which means these could be ranging from Coursera courses to you can do full-fledged 1 year executive fintech programs. A lot of institutes offer that, right? So it's up to you to choose, but you need to be able to demonstrate that you have the interest and that you have the right set of knowledge for you to be able to deliver. Then you can make that shift.
Right. So Vijay, in general, like, what are the skill set? Like, if you see a neo banking space and embedded finance space, it's more of a product that matters, right? It's ultimately you are helping customers to onboard without any hassle. So, what are the skill sets and roles that are available in the neo banking space for, let's say, a fresher from engineering or MBA background?
So I would say there are two ways to look at different kinds of roles, Pratik, right? One is role in any of the functions. So let's say you take a neobank, you would have a product function, you would have a sales function, you would have a marketing function, you would have a finance function, and you would have an ops function, typically. Okay, so sales, marketing, finance, ops, product, and engineering function as well, right? So you can be part of the neobank, right, and work in any of these spaces. Correct, any of these spaces, you could intern, you could take up roles based on your interest areas, etc. Right, so that is how you make an entry into this space, right? And for that you need to understand where do you fit in, right? Are you the kind of person who loves doing sales, which means that can you go and sell the product to different enterprises, different set of customers? Are you someone who loves marketing, which means that can you put some interesting collateral together? Can you put some interesting messages together? Can you put together some interesting campaigns in digital media? Are you that kind of a person? Or you like on ground execution, which means that you're an ops person. Like you go on the ground, you make things happen, etc., etc. So you need to find your functional fit and then place yourself there, and then build your career. I mean, that's the way to do it.
Got it. That's really helpful.
Yeah.
I think we are
Thank
on
you.
time and we have finished all
Yeah.
the questions. Yeah, Mansi.
Yeah, no, thank you so much. I think there are no other questions from the group. I think we can wrap up and thank you so much, Vijay. This is like really an interesting, well paced,
Sure.
walkthrough for the students, for them to be taking it. Thank you for the session again, and this does seem like an area of interest for the students. And again, thank you for your time. And thanks to all the students who attended this session, and do let us know if you have any feedback, if you have any questions. We also have a WhatsApp group. Email us and we'll get you added to it. And let us know if you have any other suggestions on what you would like to hear. We look forward to more such sessions with you all. And Vijay, thanks again for your time.
Sure,
Thank you, everyone.
Mansi and Prateek, and I would like to have a final statement, that I want to make to the students is that I am reachable anytime you would want to ask me questions offline, or you want to get in touch with me, understand things more, follow me, etc. So my that's my email ID, Vijay.Rajagopal. I'm there on LinkedIn. I'm there on Twitter. So feel free to connect with me. And good luck to all of you, in your careers, right? And I hope you had some good takeaways from this session. And thank you.
Thanks, Vijay.
Sure. Yeah.
Thank you all.
Thank you. Yeah. Thank you, Mansi. Thank you, Pratik.